All right, everyone, that closes out another week in the markets, and I got the technicals that you need to see for QQQ, SPY, IWM. We'll also talk about Bitcoin, XRP, and SUI sweet, because we have some sweet price targets for some of them, and I think that you're going to find that pretty exciting. We're also going to talk about catalysts coming up this next week, things that we have to be watching for, because I think the market is actually coming in next week just a little bit nervous, and we'll watch and see what that is with the reasons for it in this video, including those inflation reports, the all-important inflation reports that are coming up for us next week. So without further ado, we're looking at trading economics at the calendar that we have, the calendar of events, and let's make sure that we're looking at, here we go, Tuesday, May 13th. This is what we got going on here. We have the core CPI, the CPI with the core numbers, I should say, month-over-month numbers that we have. So we have core and regular, and when we look at those, the expectation that we have for month over month, 0.3%, 0.3% is what the consensus is. Trading economics forecast, 0.2 and 0.3 respectively. And that is a little bit higher than the previous month. Now, mind you, some of that could be because we're coming off a low month. Then a high month is a little bit easier to get. Plus, this is the first month. This is what I think makes it so huge, is that this is the first month of inflation reads that we get following the announcement of the tariff. So we'll see if any sort of pricing power is trying to be stretched for any increases in those prices for the CPI, and that's on Tuesday, May 13th at 8:30 a.m. Watch for that. I think that's the first big catalyst that we have. And if we keep on scrolling past that, there we go. And let me zoom out here just to get this thing off the bottom. There we go. That was in our way. We're going to Thursday for PPI numbers at 8:30 a.m. When we look at that, retail sales sneaking in between the core number that we have as well. So the first and third rows here. Once again, April PPI, negative 0.4 and 0.1 last month. We'll see if that gets revised, coming in higher, because like I said, higher numbers month over month are easier if you kind of step in a hole, if you will, the month before. So these aren't necessarily alarming numbers. Matter of fact, those still, I think, be pretty okay numbers. Coming in wildly higher could be something that would be a little bit disgusting. So I don't know if we'll see it translate into April's numbers yet, but I do think the pressure is also on June to produce good numbers. For May, we'll see that one full month that we get. So we got about another month. I think the inflation reads are going to be absolutely huge for us, where the Fed's concerned that if we're seeing no signs of inflation, the tariff-based inflation, I should say, if we're not seeing that show up in the reports, the market's probably going to respond to that pretty well. It should be a release of downward pressure, if not upward pressure. I think that upward pressure is still a little bit of a ways off, and I think that also translates into what we're seeing in the markets themselves. And I'll show you what I mean by that with the release of downward pressure versus the upward pressure. I did just want to tell you about Michigan consumer sentiment on Friday at 10 a.m. as well. We especially want to pay attention to inflation expectations that we get coming up for us. So the 5-year inflation expectation that we have for consumer sentiment and the number that we get here, which was previously 6.5%, the forecast estimate as per trading economics, 6.6%. Long run inflation, 4.5 up from 4.4 is what's expected. So we'll see if those are the numbers that we absolutely get from that. So guys, I'm about to jump into the charts. Like I said, I provide the analyses and the technicals over at the Discord. Me and the other expert panelists over there giving our take on the markets, on the plays that we're watching, share analyses, our buys, our sells, interacting with the community in the Ask an Expert channel as well, going in and answering particular questions that people have that don't necessarily, a little bit too specific for what we'd have in the general chat areas. You guys can get access to that Discord by using the link down in the description. Make sure you sign up for the earner tier so you get unrestricted access. I'll tell you more about it later. In the meantime, popping up trading view for you. Here we go. Looking at the NASDAQ 100 here, QQQ. You'll notice right here I say be careful, and that's because today, the 200 day, we rejected off of it for a second time. We really want to be careful here, because the more rejections we get, especially when we watch what we have going on with the RSI, we need to break over that 200 day for further bullishness. Getting rejected off of it could cause us to sell down. From a look at just the simple moving averages, the 50 and the 20, the fact that they're nearly crossing, that's a bullish thing. Getting the 20 up over the 50 would be a huge vote to the upside. It could help with that upward pressure. But this is what I mean about the release of downward pressure. All this whole movement that we got going all the way from the bottom that we got on April the 7th up until what we got today. This is that release of downward pressure on the markets that we've gotten to experience so far. we have yet to see the upward pressure. The upward pressure comes from having strong GDP numbers, by having subdued inflation, by not seeing signs of increased inflation due to tariffs. Those are the things that we're looking for. Easy monetary policy. The Fed's saying that, we think it's time that we can let up a little bit. We can be a little bit easier about what we do. It's time to cut the federal funds rate. That would be upward pressure. And I just don't think we have that yet. Now, mind you, I still think that we can break the 200-day, but I think it's our reluctance to break it so easily, which is showing up right now on the charts. So if we go over to, actually, before we go to SPY, let's first look at the EMAs, because we do have the 13 has crossed the 50, solidly crossed over the 50. It's by 1 cent yesterday, a little bit stronger today that we're up over $1 of a cross between the red and the yellow that's here, and we're up above the green. Still in pretty good shape, pretty good territory. Even the RSI is agreeing with that. I will say there was a little bit of sign of bearish divergence on the 2-hour chart. Let me see if I can show that to you quickly, because that's something worth watching. As a matter of fact, I think I got rid of the ray, but I can put this back on here for you. So there we go, clicky, clicky. And there we go. This is a nice actual trend line to watch right now. We might bottom out on that again sometime soon. We'll see, but we have the prices up. We have the momentum down. Next week could give us a little bit of that pressure leading up to the CPI report. That could be the next green light that we get that pushes us up over the 200-day. I'm absolutely watching that on the charts, that 200-day, super critical that we get over it. Now, also, by the way, lines up with what we have for the 50-week at 488, and the market is just so reluctant to cross over that 488 number. We closed today at 487.97, 12 cents shy of that 50-week moving average. Getting that 20-week to cross down over the 50 could signal a longer-term bearish trend ahead of us, even though we're up above the 200-week right now, which is still, in a longer sense, still part of a bullish sentiment from a longer time frame, from a longer period of time. So that doesn't mean the selling's over, but that means, generally speaking, when we look at the longer time spans, the general direction is still up on a weekly basis. Same thing for the monthly basis, the general direction. As you zoom out, you'll notice that the drops are less and less significant versus when you look at them on like a daily chart, which actually looks pretty darn scary. And you guys, we've gone through it together here. It feels that way. Moving over to the SPY. Same thing, be careful here at that 200-day. Once again, day 2, not crossing over it. CPI next week, I think, is that big trigger. We're going to be watchful for that. Now, mind you, also tariff news, trade deals with China, for example, going on, the trip to UAE that Donald Trump has coming up. All that stuff can be catalysts for us as well. Just they won't necessarily show up in the economic reporting. That's also news that we're going to be watchful for. Hopefully it's good news, moves us to the upside. We all like bullishness more than we like bearishness. IWM, very, very good. Down below the 200-day as well, just much farther down. The Russell 2000 stocks just take it on the chin. That's all there is to it. Whenever things are bad, they take it on the chin. Whenever things are good, it's really easy for us to see outperformance to the upside. So QQQ, SPY, they crossed the 200-day. We can see a little bit more reason for Russell 2000 to come out of its shell and maybe even have a little bit of outperformance at that time with that bigger influence from those bigger indices really impacting the Russell 2000 stocks. Nvidia, just to give an update, I'll zoom in here a lot for you. Really stretch that out. You'll notice we retested that trend line today and then retraced up before the close. We need to get on top of 118.09. If we can, that gives us the green light to 125, which is absolutely massive resistance right around 25. 133 resist, almost 134, and then our price target, if the ascending triangle plays out, about $144 per share. Earnings are coming up for us on Wednesday, the 28th of May. That's going to be huge. We'll see if we get that run up. I think it's going to take some good news about the trade deals with China. I think the market is going to have to continue upward to give us that pressure to keep on increasing the trading multiples of the stocks that are within those indices. We have a lot that needs to line up for us, and we also need some excitement that goes along with it. So maybe the trade sanctions with China also get there's a little bit of relenting there, if you will, some good news to let us believe that Nvidia is going to have much more revenue coming back in from China that was pinched off during the Biden administration, and maybe that gets relaxed and maybe we start to see that revenue flow back in, which translates very well to the bottom line. About 75% gross profit margin, 70-75% comes that way, and then the profit margin on top of it is also just flat out enormous. So for Nvidia, very hopeful, very bullish, especially long-term bullish, one of my long-term holdings. Moving over to Bitcoin. Absolutely nailed this 104.324. We actually came over here and we hit the peak of this was 104,332. So within $8 of where I said that we would, next stop would be here. We almost got it Thursday. Friday, we actually got that stop sell down. And then if you look more on Bitcoin, let me reset the view, you'll notice, and I know it's a little bit crazy right now. There we go. You'll notice the candle that we got, and we did stop where I said that we would likely see the next stop up here if we got the permission from down here at 97,270. The next stops that I have here for you. Here we go. So what I said here is that we need to close above this 107, 179. That's the next permission that we need. There's some pretty massive resistance there. And then we also need to see for that, the next note, there we go. And then this, the 109,356. And that's the big one, my friends. If I take down all the markup, reset the view, and really zoom out on this for you, what you'll notice is that the previous peaks that we had, and I'll really try to get a good view of this on your screen. These are the previous peaks, the all-time highs that we had going back to December of 24 and then over to January of 25, and we could not get over that 109 number. That number again was 109,356. That's the number, absolutely the number that we need to sit on top of. If we do that, we have room up to something like $120,000 per BTC. So we could see another 10% stack on top if we can get a candle on top of 109,356. So I stay bullish in the longer term for Bitcoin, and I'd like to be bullish on the markets. I'm so close to thinking that we have that next leg up. It is the 200-day and the 200 weeks moving average, 50-week moving average for SPY, for QQQ, getting on top of those, especially with volume conviction, our volume support showing conviction in that movement will be absolutely massive for further upside in the markets. And I think Bitcoin would do well to move along with that as well. So we just want to give a quick commentary, by the way. SUI, taking a little bit of a rest today after making a 21% movement, giving back 3.3%, and then my price target on that 496. So what the heck, let's just call it $5, because honestly, if it does make it up there, it's probably going to punch through maybe to about 520. We'll see, but I'm still going to stay solid at that 496. And then XRP, still need that volume support, but it is holding nice, like right along this bottom that we have right around here, right around the low $2 range is where we keep on finding that buying pressure come in, keep on propping us back up. But that resistance does hold out until at least 250, but we have signs of selling pressure all the way up until about 267. So a little bit mired here as we look at it, but we do have a free rise area. Should we break above 250 up to about 287? So guys, I'm going to keep on saying it. There's a lot of reasons to be hopeful in this market. Definitely some reasons to be hesitant as well. There's definitely concerns, reasons why we haven't just crossed back up over the 200-day, for example, or the 50-week for Qs or SPY, for example. There's reasons to hesitate, and that's why we see that hesitation. But like I said, we're so close enough to be hopeful that maybe there's upward pressure coming our way. So I do have a short hedge position out. I posted it over at the Discord. You guys can come and see it if you'd like to. Links in the description. You can see me and the other expert panelists there to help you in your pursuit of financial freedom or chasing that alpha in your portfolio, if you will. The products and services are nearly endless. Go ahead and click on the link, at least read what it has to say, and for just over what equates to $1 a day, all of that can be yours. And there's also some coursework down there through Stockmo Academy. Stockmo is a personal friend of mine, and he and Mrs. Mo put together some very, very solid courses. And I'll tell you what, they are tight and they are absolutely worth your while. There's technical analysis, trading using technicals through the bread recipe, which I personally use. And then there's also an options course. Bundling those courses is going to save you a ton. If you use the code word DOCTOR, DOCTOR, it's going to save you even more cash, regardless if you do just one course or bundling the courses. And guys, why not invest in yourselves? It's the best investment that you can make beyond a shadow of a doubt. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.